Good evening, everyone. It gives me great pleasure to introduce our speaker for today's session, CAKV Suresh Babu sir. Sir is a partner at RVKS and Associates, heading the firm's operations in Andhra Pradesh and Telangana. A chartered accountant since 2005, he brings with him nearly 20 years of experience in indirect taxation, appeals, compliance, and advisory. Sir has also been actively involved in mentoring startups, implementing internal financial controls, and providing virtual CFO services. As a qualified GST faculty, Sir has delivered numerous training programs for corporates and at ICAI Hyderabad, contributing immensely to the profession. Today, Sir will be sharing his expertise on a very relevant topic, Input Service Distributor ISD in GST, with practical insights that will be valuable to all of us. Uh, Over to you, sir.
Thanks, Asha. Thanks for introduction. Good evening, all, and thanks for HCAS giving this opportunity. Yeah, before going to the session, I would like to start a session with two basic things. Any learning curve, I'll tell you the term to learn with a concept called WELL, W-E-L, well. Why this provision or why these things are coming into the picture, and what is the object of this implementation, and engage. Try to engage in the activity or a discussion, irrespective of whether you know the answer or not, or you know the provisions or not, which make you to understand and analyze where we are going wrong or where we are correct and how to analyze the situation. And third thing is learn. Life is a never-ending student life, and we keep on learning the various things on the day-to-day activities. So if you start any concept with the well concept, automatically we'll know the background, why it has been introduced and why it has been analyzed and why you are thinking that one, and keep on learning. So my humble request is work in this entire event. We'll do a concept all well, and we'll ensure that along with the learning, we'll do a engaging in the activities. Now, second thing, wherever the topic has been completed, we try to come out with some question and answers with a poll option, and request you to participate in the poll option, which will facilitate an active participation and test our knowledge and takeaways from the session. With these two basic points, I would like to start my presentation. The concept given to me is the ISD under GST. If any one of all of our team members who has been participating in this webinar, if any person who date of year, birth of year is before 1995, the ISD is very familiar, because we don't know the phone calling, what is ISD call. For value of money and time is their concern. During this initial days, when the revolution happened in the telecom industry, we used the term called ISD. That is where first I heard the ISD, and later coming to this, our professional life, we heard the ISD term. So just I'm giving a thought process. Who has been year of birth is before 1995 or 90s, definitely heard the term of the ISD. And whenever we do a call, for every minute will count. For 30 seconds, they are going to charge one more rupee extra. So we keep on monitoring every second at that time. So value of the ISD is counted in seconds. Okay, right. Going to the back to our topic, ISD and the GST, and how it's going to impact our day-to-day activities, and how it's going to impact our maintenance, compliance, record keeping. All those things we are going to learn with a practical approach. So this entire session I'm going to cover split into 7 parts, and the 7 parts, 7 sessions is going to be relevant background of the ISD concepts and why it has been introduced, what is the objective, and what is the takeaways from that introduction, and what is the ISD, how they bought under GST, when in 2017, and what is the difference between 2017 to 2025 ISD under GST, and what is the registration procedures, and what are the cares to be taken under registration. Under ISD, once you got registration, how to avail the ITC, how to distribute the ITC, what are the documents you need to take care of, what are the returns need to be filed, we'll cover under session 4. And if there is a non-compliances, such non-compliances, what is the impact of that non-compliances, how it is going to impact that registered person. and preparedness for the compliances. By this time, it's already we passed away 4 to 5 months from the date of mandatory applications. But anyhow, there is a lot of scope for improvement and standardization of the compliances. And considering the early bird options, we are thinking of preparedness also. We are given as one of the topic in the discussion. And this last part is my personal views. And is there a bottlenecks and compliances burdens? How it is creating a bottleneck for the taxpayer, and what are the burdens the taxpayer is taking care of, and what are the problems still not resolved by the ISD. So this entire 2 hours or 1 hour 90-minute session, we are going to cover the seven topics under ISD, and we may go to the question and answers by the audience if anything specifically is there to the which has been addressed in the presentation. Yeah. Before going to the GST ISD, I would like to understand, is the ISD concept under GST law, is it the new first time we are listening, or is it been heard by us before that? Just I would like to take a active participation. So is the concept under ISD, is that the new in the GST law? Is it a new under GST law, or it is a old concept? So I would like to, for each question and answers, give a pop-up with a poll option, and you can give a active participation for a better understanding and better participation. Yeah, just I'm launching the question. Response decision from the audience is nearly 80% no and 20% yes. If you see the ISD concept is not new GST, the answer is correct. And the concept is borrowed from the service tax law. The ISD is not a new concept under GST law. It was borrowed from the service tax law. And if you see the service tax law, what it says, the service tax law was introduced in 1994, and in 2004, ISD concept was introduced in the service tax law. So under pre-GST, the concept is borrowed from the service tax law. Under service tax law, the concept ISD is introduced in 2004 from September 2004. And Rule 7 of the Senate credit rules is talking about the ISD. So Rule 7 of the Senate credit rules in 2004, this ISD concept brought, and with the objective of 3 major objectives and 2 incidental objectives. And these are the objectives what it brought. One is centralized distribution. Reason because under service tax law, there is no requirement under the service tax law to obtain the service tax registration for every state or every union territory. It says that when entire India can pass with the single registration. So to control the availment of ITC on the common imports, the objective was been bought. And second is systematic ITC allocation. So the ITC which has been pertaining to the service tax law, to make the ITC has been passed on to the multiple locations, the object has been within the country, they have done that one. And avoid duplicate claims, especially taking the single invoice under service tax law, there is no methodology to trace the input is claimed on the same invoice multiple times and multiple GSTNs. There is no tracking mechanism. To avoid these things, the ISD concept is being bought, and it is a primary objective. And the standardization of documentation. So they will identify the unit where the common input tax credits are getting accumulated and how it is getting distributed, and they can be uniformity in the entire organization. And transparency. To identify that there is no common input taxes located in other location other than ISD, this is the objective they bought. The same slide we'll discuss at the last event at session 6 and session 7 in our discussion, how it is going to be make relevant under GST law and how it is going to be impact under GST law. We'll discuss the same slide at the time of discussing on the section 7 and 8 in the presentation. Yeah, right. So before going to ISD concept, I would like to understand, is it going to replace the cross-charge mechanism? So before going to the cross-charge mechanism, because I am talking about the topic called ISD and bringing a new terminology called cross-charge. So if you see under GST law, the new concept called cross-charge mechanism is brought into the system. by defining under section 7 supply definition. In the supply definition specifically, they termed as a cross charge by between the distinct persons. And who is the distinct persons? The persons who got registered under the same PAN with the multiple GSTNs called as the distinct persons as per section 25. And schedule 1.2 clearly mentioned that one services between the distinct persons are liable to consider as a supply and hence liable to taxation. So this is the cross charge. Is it going to replace by ISD? I would like to take a poll and take the output answer from you people. The major answers is saying that no, and nearly 20% of the team members responded as a yes. And I would like to reveal the answer saying that one ISD cannot substitute the cross charge mechanism as its scope is limited to the distribution of ITC on input services. It is only distributing the ITC credit, input tax credit, and it is not going to replace the cross charge mechanism under the GST. And the ITC, what is going to be distributed by the ISD is only on input services, but does not address the following type of transactions. First one is reverse charge mechanism. I may get a negative answer from the team members. This reverse charge mechanism, how it is going to impact under the ISD. I mark as a star mark on the top, which we'll discuss in the going forward. Second one is capital goods. And the third one is input goods. Input goods. These are the three items which are been not properly covered. Two items, input goods and capital goods, not covered at all. And reverse charge mechanism partially covered with the additional burden of compliances. Yeah. So before going, I would like to first make a differentiation between a cross charge and ISD. As we discussed, cross charge is going to be transaction taking place between the distinct persons who was defined under section 25 and considered as supply and liable to tax as per schedule 1 clause number 2. So nature of transaction, taxable supply because it is being termed in section 7 between distinct persons as per section 25 and schedule 1 clearly states that it is a taxable supply. And coming to ISD, the nature of supply is not at all a supply. It is only a distribution of ITC. So it's not a supply. When it is not a supply, taxability does not come into the picture. Legal basis. As we are discussing, the legal basis for cross charge is section 7, which has been supply definition covered under schedule 1, read with rule number 28. Whereas distribution of ITC covered under section 20, 21, rule 39 and 54. Taxation. So GST payable on the value of the cross charge invoice, and coming to ISD invoice is only distribution, no GST payable on the distribution. Documentation. So the documents is a small difference, a tax invoice, debit note, credit note. Whereas in case of ISD invoice, ISD credit note has been used under the respective rules. Returns. Coming to the cross charge mechanism, will be flowing the transactions as part of GSTR 1 and GSTR 3B, whereas distribution of ITC flow from the GSTR 6 return. Valuation rules. Because there is no question of taxable or valuation, taxable supply, so the valuation rules does not apply to the distribution of ITC, ISD, and it will be cross charges. There is a valuation rules defined under the rules, and at the same time there are few circulars how to value the transaction between the distinct persons. Coming to the basis of distribution. So method which is appropriate based on the nature of transactions. So while doing a cross charge, there may be any method the taxpayer can opt to do a cross charging between the distinct persons, whereas transaction ISD is being defined in the law very clearly when you need to follow what method, and we strictly need to follow irrespective of the justice of the transaction. That point, why I am using the justice, I will delay with the example I will explain the transactions in the distribution session when we are talking about the distribution of ITC by the ISD. Yeah. Now coming to the ISD concept under GST. When it was introduced, why it was introduced, and what is the revolutions taking place in ISD, that's what we are going to see here. Yeah. So legal provisions of ISD, if you see the rule number 31, rule number 39 is talking about more thing, and section 260 subsection 61 defining the ISD. What is the definition of input service distributor? And section 20 is talking about the how to distribute the accumulated ITC by ISD. Section 21 is talking about the distributed ITC taking back from the distinct persons. And section 24 is talking about the when you need to register, why you need to register. Rule number 39 is talking about the distribution of ITC, method to be followed, reversal of ITC, returns to be filed. And rule 54 is talking about the what type of invoice you need to issue, what type of credit notes you need to issue, when you need to issue. And rule 35 is talking about furniture of the returns under the ISD. And section 122 is specifically talking about penalty for in case of non-registration. And what are the specific notifications made these sections active and made amended with the immediate with the mandatory provisions. Rule notification number 12/2024 is talking about rule 39, and notification number 16/2024 talking about section 261. ISD is a mandatory provision. Yeah. So before going to the current ISD provisions, which are effective from 1st April 2025, I would like to give a snapshot, the comparison between 2017 and 2025. What is the major changes and what is the difference between both of them? See the requirement. When the GST law introduced on 1st July 2017, the ISD is optional and the taxpayers has been not compulsory mandated to comply with the provisions. When from 1st April 2025, the ISD mandated to comply with the ISD provisions. How it is mandated? So very clearly, it's mentioned in the circular number 199 11/2023. If ISD mechanism was not mandatory, and they gave it examples and made the lot of relief to the industry. But by notification number 16/2024, they made it ISD compulsory in all applicable cases. Practical approach. Business chooses cross charge or ISD depending on the convenience. So if you ask Suresh in 2025 before 1st April, is the all are complying with ISD provisions? Who feel the benefit and who has been accustomed to the procedures? They are gone for registration and adherent to the compliances, but out of most of them are followed with the cross charge mechanism. But from 1st April 2025, the rule 39 makes a mandatory, and we need to follow with the compliances with the ISD rules. Reverse charge. Before 1st April 2025, there is ambiguity. ITC under reverse charge mechanism, transactions which are liable to reverse charge mechanism is distributed via ISD or not. But very clearly in the new rules, it is mentioned that ITC pertaining to RCM transactions also needs to be distributed. Apportionment of exempted units. Whether the ISD distributing the input tax credit, is it to distribute only the units which are taxable, or it need to be distributed to the exempted units also? It is very clearly mentioned in the amended rules. It need to be distributed to even exempted units also. Suresh, you may come out question, what is exempted unit, why it is required? Those are all things we are going to cover in the frequency asked questions, and at the same time we'll give the examples there. Treatment of ineligible ITC. Ineligible ITC was not particularly focused earlier. Reason because irrespective wherever you are charging, no one is bothered. But ultimately in the new rules, which is effective from 1st April 2025, they are specifically mentioning that one ITC on ineligible items also needs to be distributed by ISD as the manner specified under the rule number 39. The next question will come, when it is ineligible, what is the purpose of distribution and what is the object of the thing? So if you see now, when we are filing GST 3B, the input tax rate which is ineligible, we are mentioning under table number 4, B1 and 2. When we are mentioning table number 4, B1, it's a permanent reversal. B2 is a temporary reversal. When is a permanent reversal is done? As per the arrangements between the central government and state government, respective state will get their share of tax here from the central government. So to capture the same thing, nowadays, each state government is very particular about the reversal of ineligible ITC, which is showing the 2A or 2B. They are following up and getting it reversed. So this is going to be attained by implementation of ISD, allocation of ineligible ITC to the respective states, and respective states may get the benefit of the reversal from the taxpayers. This is the specific objective for ineligible ITC distribution. Coming to compliances burden. So earlier, if the taxpayer obtained the registration, is the burden is lies on the taxpayer. If in the current scenario from 1st April 2025, it is a mandatory for all the taxpayers who has a multiple registrations and common input tax credit. So just we are moving towards the definitions, and just to understand key definitions, so I'm bringing here, I'm not bringing all the definitions. If you see here, the definition which is covered in 261. Let me just read out for a better understanding. Input Service Distributor means an office of the supplier of goods or services or both. So here includes supplier of goods or services or both, which receives tax invoices to the receipt of input services. Even though the supplier is both, but this ISD will receive only input services, including invoices in respect of services liable to tax under subsection 3 and subsection 4 of section 9. What is 3 and 4 is talking about? A reverse charge mechanism, inward supplies which are liable to reverse charge mechanism for or on behalf of the distinct persons. The distinct person, what we discussed about section 25, the registrations under GST obtained on the same PAN. So on behalf of the distinct persons referred to in section 25 are liable to distribute the input tax rate in respect of such invoices in a manner provided in section 20. This is the one. So once if you see here talking about the distinct persons and all inward supplies, it refers to input services, subsection 3, subsection 4 of section 9, RCM transactions between the distinct persons. If the three conditions are satisfied, those cases, the ISD registration section is applicable for a taxpayer and you need to obtain a registration. This is mandated by notification number 6/2024, which is effective from 1st April 2025. Right. So I tried to cover the entire ISD compliance process in the flowchart. Just let me walk through the snort map. So once you obtain a registration under section 24 and separate GST for ISD defined under HOR units, whatever it may be, who got the ISD will call as a distinct person, and the type of services what they get it as an inward. First one, receive common input services under FCM, forward mechanism, and services which are liable to RCM, and receive SCZ exclusive inward supplies. These are the three type of services which may come to the ISD, and where in case of first RCM credit transfer to ISD by via tax invoice or a document called tax transfer document in compliance with the rule 54(1)(a) of the CGST rules. So the tax paid on RCM, it will be transferred from the regular GST and to the ISD through ISD by a form called 54(1)(a). Whereas coming to the FCM, the transactions which are liable to forward charge mechanism, those documents directly will be landed to the ISD to distribute the input tax rate. Similarly, services exclusively received from for the SCZ purpose. Once this total services been landed in the ISD, they'll identify which services are exclusively used for one unit common for all the units and common for SEZ. The distribution accordingly move forward. If it is exclusively used for the single unit, 100% will be allocated. It has been exclusively used for SEZ, it will be allocated to the SEZ. If it is common for all, the allocation will be based on the pro rata turnovers. The turnover definition, all those things we are going to discuss in the further slides. And ISD will issue the ISD invoice or ISD credit note as applicable. And based on those documents, the transaction will flow into the GSTR 2B of the regular GSTN after filing the GSTR 6. And based on the GSTR 6 filed return and the transactions which are reflecting in the GSTR 2B, the regular GSTN will avail the input tax credit distributed by the ISD. This is what the flow I try to bring into a single slide, and we are going to split this transaction into registration, availment, distribution, records, and return filings. In the 5 parts we are going to discuss in the next few slides. We are talking about the ISD registration. When we need to obtain an ISD registration and who need to obtain, we'll have a snapshot. When an organization has a multiple units reached under the one PAN with the different GSTNs as defined a distinct persons under section 25. So you need to have a PAN based multiple GST registrations and you are eligible and applicable to you to comply with the section 261 of the ISD provisions. For what purpose? Distinct person procure certain services centrally, say head office, which would be common utilized by a distinct person. Take an example, any location availing any services for the benefit of the entire distinct persons, entire company. Take an example, best example is audit fee, internal audit fee, or any other services which are commonly like marketing, all those things commonly benefiting to the entire organization, irrespective of the state or location of the unit. Those type of services which are being used, procured by a distinct person for a common benefit. Invoice for such services are issued by the HO. Because in the given case, I use that HO is a distinct person for example purpose. So such invoice need to be issued by the HO. And applicable only for ITC in respect of input services, not for inputs and capital goods. Registration. So these are the basic conditions what we need to take care of. There should be multiple GSTNs on the single PAN, and the services are procured by a one distinct person for the benefit of multiple distinct persons in the same PAN number, and invoice issued by a single location, and it is only should be input services and does not acknowledge capital goods or input goods. So registration requirements. So mandatory to take registration ISD apart from normal registration under GSTR 01 as an ISD. The process of registration is same as normal registration. What are the documents we are submitting? All will be the same. Maximum exception will be the only disclosure of the bank account and classification of services what you are rendering. Reason because for ISD there is no outward supply. It is only distributed of input tax credit. So you are not required to disclose your bank account details and not required to give your product classification. It may be HSN or SSC codes. So coming to the threshold limit, generally once the GST registration is obtained at a PAN based, as per section 24, mandatorily you need to obtain registrations for all the units or the operations which are taking place in the different states. You need to obtain the registration under GST irrespective of the turnover. Similarly, coming to the ISD, once you have a GST registration, whether your turnover below 20 lakhs or above 20 lakhs in the specific location, the turnover limit is not at all a criteria. Your 3 conditions what we mentioned is having a multiple GSTNs as a distinct person, common services, then the condition will come into picture and you need to obtain the ISD registration. Penalty. Coming to the penalty. Penalty talks about the registration. Once section 24 says mandatory registration, section 24 clause 8 says ISD units are mandated to register. If the registration does not comply, the penalty is going to be 10,000 rupees or 10% of the tax due. The registration requirements, and this is as simple as how you are obtaining a regular registration. We will take few practical scenarios to understand how the registration is going to impact. Is it going to be required or not? The first question is, if a head office and a branch office are in the same state, is ISD is required? You can just answer the poll. We received around 33% as a required and 67% is not required. And just I'm going forward. Yes. See, the irrespective of the whether in the same state you have multiple registrations or not, the condition is you need to have a different GSTNs under same PAN. The condition is the head office and the branch office are in the same state. So you have a two different GSTNs under the same PAN. And there is a probability and possibility that common services is there for the both the locations or both the units. So hence the GST registration, ISD registration under GST for in this scenario is mandatory. Can a business have a multiple ISD registrations? Just please give your inputs by responding to the poll. We received around 77% has been yes and 33% no. The answer is yes. A business can have multiple ISD registrations for different office locations if needed for proper ITC distribution. The objective of ISD is not to make a single location need to obtain all the services which are common for the entire organization. It may be a depend upon the feasibility that common services can be distributed or procured from the various units or various states. So ISD can be obtained by all the GSTNs or few of the GSTNs depend upon the requirements. So in the given case, the answer is yes, and multiple GSTNs is possible for a single GST PAN-based organization. Question number 3. Are ISD provisions applicable to an SEZ unit when it has multiple units? Why specifically we are talking about SEZ unit? SEZ unit is exempted. They can get the tax-free services by taking LUT. In spite of that, I am asking this question specifically and request you to give your response. Then we got A plus, 90+% are responded saying that one, yes, we required. The answer is yes. The reason because there is no differentiation whether SEZ unit or non-SEZ unit. The criteria is only two criteria: multiple GSTNs on same PAN and multiple GSTNs. Let us move to the next session, which is tricky and very interesting for all of us. And ISD, availment of ITC, how to avail ITC, when to avail, what to avail, distribution, what to distribute, how to distribute, and documentation. What are the documents we need to use for distribution, reversal, all those things, and return filings. What are the returns available and how to file and what is the timelines. Accounting, which is the most tricky area for all of us. Still, we are not able to stabilize even after 4 months. And other points with reference to the above 5 items. So I'll try to cover one by one, and each one area I'll take some few practical questions and followed by the answers for the same. In between, if you have any question and answers, you are free to post the question and answers in the Q&A sessions, and we will answer at one go in the end of the session. Yeah. So ITC availment to ISD. So what are the ITCs, input tax credits available to the ISD? Common input services procured, including ineligible ITC. Whether you procured eligible or ineligible First, any services which are pertaining to common benefit, that transactions need to routed through ISD only. Service from a third party vendor used by multiple locations and services liable to RCM. The RCM transactions which are procured for the benefit of as an organization level are need to be routed to the ISD. As we are discussing multiple times, is not covered under capital goods and it is not covered on inputs. So first I'm going to cover as a FCM, forward charge mechanism. What are the steps to be followed to avail the ITC by ISD in the FCM transactions? So first step, vendor must issue tax invoices addressed to the ISD GSTN. How it is possible? How can a vendor knows that this transaction need to issue the ISD or regular GSTN number? This is what the responsibility of the procurement team will comes into the picture. They need to inform in advance for what type of services, for which vendor, on which GST number they need to issue the invoice. If by mistake they issue the regular GSTN, what will happen? How it is going to be? We are going to discuss on this. So this is the first step where you need to identify the list of transactions procured for the benefit of common benefit and inform your vendors in advance and ensure that while accounting the transaction, it has been properly narrated with the ISD registration or not. If not, you need to take action on the first step itself. You should not wait till the year ending, which is going to be a big burden on the ITC compliances. Upon the vendor filing their GST return, the transaction details will be auto-populated in ISD. This GSTR 6A. What is 6A? 6A is similar to your 2A, 2B, which has been read-only return, which is reflecting in your ISD portal, login portal, where the list of vendors filed the transactions against the ISD GST number. So you can track your transactions which are reported in ISD by your vendors. So if the GST one filed by your vendors, by giving reference to your ISD GST number, you can cross check in 6A and reconcile with your books of accounts. Then ISD can then file the GSTR 6 based on the transactions reflected in GSTR 6A. Right. So now the transactions what are reflecting in 6A, they can file the return. Next question comes, whether if the transaction is not reflecting in 6A, what to do? How to address the scenario? So we'll take some few practical situations and we'll go with the inputs. Yeah. If the GSTR one is not filed the vendor on or before 11th, but filed before 13th of the following month. Why specifically we are choosing 13th? Because due date for filing the ISD return 13th of the following month. So I have chosen 13th of GSTR 6 by ISD. Does those transactions reflect in 6A? The poll is on and request you give your answer. 57% answer is no and 43% the answer is yes. And let us see the right answer. Yes, GSTR 6A is a dynamic report till the GSTR 6 is filed by the ISD. Take a scenario, the due date for filing GSTR 1 regularly by the GST taxpayers is the 11th of the following month. And the time frame given to the GSTR ISD GSTNs to file the GSTR 6 return is 2 working days, 12th and 13th. So once the GSTR 1 is filed, the transactions which are reported by the regular GSTNs that automatically will get reflected in GSTR 6A till the GSTR 6 filed by the ISD. Let us presume 11th itself cut off and 12th has a right to file the GSTR 6 by the ISD and he filed on 12th. If your GST and regular vendor filed the return on 13th, then that will not reflect in 6A. But if you not filed on 12th and you are waiting till 13th evening, and if your vendor filed on 13th morning, GSTR 6A dynamic report and automatically transactions will reflect in the 6A. Let us take a scenario at 13th morning, 10 o'clock, GS6 was filed, whereas your vendor filed the return on 2 p.m. on 13th of following month. In this scenario, that because your 6 return is filed, your dynamic report 6A is automatically frozen by the date of filing time. So even though he filed the return on 13th, the transaction will not alter the 6A, and the transaction will come and reflect in your 6A pertaining to next month transactions. So 6A is dynamic report till you file the GSTR 6 of your ISD GST return. Clear? Going to the next question. Yeah. If the GST R1 is not filed by the vendor on or before 11th and the following month, can ISD GST and avail the ITC and distribute it. So my scenario here, return was not filed by 11th and ISD person knows that one return was not filed by the vendor and not reflecting 6A. Still, whether I have a right to take input tax credit on those invoices which are in my hand and distribute to your distinct persons. The poll is on and request you give your active response. 70% is no and 30% yes. The correct answer is yes. By adding the missing invoice which was not reported by your vendor, you have an option in GSTR 6 to add this transaction to table 3, add an invoice, and you can still distribute the ITC. Suresh, you are taking the input tax credit which is not there in 6A. So you are availing the ITC more than the amount what is reflected in 6A, which is similar to 2A and 2A and 2B. Is it not going to impact? Definitely, we are going to discuss that point. That is going to come here. In the above question 2, ITC availed and distributed by ISD before the transaction is reflected in GSTR 6A. Does this lead to excess availment of ITC? So I would like to hear from you. What is the outcome? Okay, right. So in the given case, even though the taxpayer availing the input tax credit, even he is fair in availing the ITC, reason because he ensured the compliance with section 16 and respective rules by withholding a tax invoice and paying the tax transactions to the vendor. In spite of that, the vendor is not filed. There is a chance that department may question your availment of ITC, but this is to be a debatable situation, how you need to prove it. This is a practical scenario where transaction is not reflecting in 2B and availing the ITC in 3B. Similar to this one, the same risk is be there with this transaction. Let us go see one more question. In the above, question 2, what if the vendor fails to file the return within the due date given under section 16.2C, read with section 16.4. So vendor is issued an invoice in the month of May 2025, and to avail this ITC for ISD or regular GSTN is available till 30th of November of the following the financial year. Say in a given case, May 2025, you have a time till November 2026 to avail the input tax credit. Till that time, our vendor not file the return. What we need to do? Is it possible to avail the input tax credit? In the given case, the distinct person who has availed ITC needs to reverse. Reason because ITC is being eligible to avail the input tax credit subject to payment of tax by the vendor. Very clearly, section 16.2C specifies. So in the given case, the ITC is being not discharged by the vendor by filing his GSTR 1 and 3B. Hence, ITC what is availed by the ISD by distribution to the regular GSTNs needs to be reversed by the regular GST numbers who avail the ITC, not ISD. This is a very tricky situation. Though ITC, even though distributed by ISD has been distributed, let us take unit A, B, C, D, 20%, 20%, 20%, and 40%. So the same proportionate, the respect to GSTNs needs to reverse this transaction along with interest and paid by reporting the transaction in GSTR 3B. So this is where tracking system will become very difficult between the ISD books and the transaction done with the vendors, where vendors not paid or reported the transactions in GST portal. Now let us take a scenario where availment of ITC by ISD on inward supplies liable to RCM. So till last slide, we are talking about forward charge mechanism, how to avail ITC, what are the scenarios, and what is the challenges. Now let us come this transactions talking about more about RCM transactions on inward services which are liable to RCM, reverse charge mechanism. So this has been tried to capture in the 4 steps. 1. Vendor issue tax invoices to regular GSTN. See very clearly in the FCM, the vendor supposed to issue the tax invoice to the ISD GSTN. Where case of RCM transactions needs to issue to the regular GSTIN. Suresh, why the question is FCM they need to issue to ISD and RCM why they need to issue the regular GSTN. And let me try to give the scenario. If you go through the GST ISD registration login credentials, there is no requirement of bank account I mentioned. At the same time, there is no question of GSTR 6 and how we have a 3B. There is no tax liability discharge option under ISD logins. So the ISD registered person does not have a obligation or a possibility to pay taxes by his login credentials, because he is meant for only distribution of the tax credit which is accumulated on the inward supplies. So he does not have outward supply tax. At the same time, he cannot discharge the tax liability in cash. Regular GSTN as a RCM transactions. Once the regular GSTN pays, regular GSTN discharge the RCM liability. So now the transactions when reported in the regular GSTN, based on that, the regular GSTN needed to pay the RCM liability in GSTR 3B return. Okay, what is the due date for return? Following month, 20th of the following month. Once regular GSTN comply with the payment of RCM and filing the return, it can transfer here, not the invoice, it's a transfer, ITC transfer document as defined under Rule 54(1)A. The regular GSTN need to issue a document called ITC transfer document in compliance with the Rule 54(1)A. To whom? To the ISD where it got registered. Right. So now the question will come, RCM is paid in Telangana and discharge the tax liability, whether it can be transferred to the ISD which is located in Karnataka. The answer is no. Reason because the RCM ITC can be transferred to the within the same state. This is the one of the tricky situation where RCM transactions are there. ISD also need to be available in the same state, because they cannot transfer the ITC credit on RCM transactions from one state to another state by issuing a document called 54(1)A ITC credit transfer document. So this is very careful area when you need to take and where you need to take your RCM transaction invoices is very important to ensure that ISD compliances. This will play a key role in the obtaining ISD registrations for which locations, when what type of transaction we need to monitor very carefully. ISD avails and distribute ITC. Based on the ITC transfer document, the input tax credit distributed can then avail the ITC and distribute to among the distinct persons. So once the ITC is available, then it can be distributed in the methodology what has been discussing in the next slides. Is it clear? Yeah. So let us go with a few practical questions. Does ITC transfer document details reflect in GST 6A? Just a poll is on and request to give your inputs. And 57% saying that on yes and 43% no. So let me reveal the answer. The no. The reason because the document which is being issued under Rule 54(1)A by the regular GSTN to the ISD is not a online document which has been system driven document. It is in a manual document generated by the regular GSTN, transferred to the ISD. Reason because under GSTR 1 or GSTR 3B, there is no option to disclose or a generated document called under 54 Rule 1A. So this document is coming a manual transaction, which is required a additional control from the GST, regular GSTN versus ISD GSTN, and this transaction is not going to reflect in GSTR 6A. So based on the physical document, the ISD registered person need to enter manually in his GSTR 6 return to avail this ITC credit. Next question. Is ITC available to distribute in the month in which the regular GST has discharged the liability? So take a scenario. For the May month, I received a RCM transactions, and the RCM transactions liability I'm going to discharge on following month by 20th. Let us take June 20th, I'm going to pay taxes. So in the regular due course, my transactions which are pertaining to May month, I'll pay 20th, and in the same month, I will with the ITC, create in 3B and discharge the cash liability and adjust against my regular outward supply liability. In the given case, ISD case, the tax which is discharged by the regular GSTN can be distributed by ISD in the same month, yes or no? The poll is on. The answer is no. You may ask Suresh why? Because when we are paying on GST 3B in the same month, we are availing the ITC in the same month. Why? Let me make a flow of the transactions. If you take GST 6, the due date for filing is 13th. And GST 3B, due date for filing is 20th of the following month. It is 7 to 8 working days earlier to the GST 3B filings. So what is the condition to avail the GST input tax rate on RCM transactions for payment of tax in cash? When the cash is being paid by the regular GSTN on or after due date for filing the GSTR 6. So there is a 7 days or 6 days gap, 7 to 8 days gap between the GSTR 3B and GSTR 6, which is being filed by the ISD. So the input tax credit on RCM transactions discharged by the regular GSTN is not available in the same month. Here we are going to face a 1 month time gap for the availment of ITC, and there may be a working capital concern in the given case. Before going to the distribution of ITC and through ISD mechanism, I would like to ask 2 more questions, especially on this RCM transactions, which is more relevant and interesting. I'll go back to the previous slide. Yeah. So here, if you see here, when you are talking about the IGS RCM transactions liable to tax, and based on the taxable person who issued the tax invoice. Let us take, I am sitting in Telangana and I issued an advocate invoice from Telangana. I am going to discharge the tax liability, CGST, SGST, because the supplier also within the same state, and the place of supply, I'll take the supplier place and I'll discharge the liability, CGST, SGST. In the given example, if my supplier, an advocate who is sitting in a Karnataka state and giving the services to Telangana, in the given case, my vendor supplier is sitting in a different state. When he is giving a different state for the supply of services is a interstate supply, and I need to apply the IGST, not CGST, SGST. Reason because my vendor sitting in a different state and tax applicable depend upon the from the where supplier is located. Right. So now I discharge the IGST input tax credit. But when I am distributing this or transferring this ITC from Telangana regular GST number to ISD of Telangana GST, which tax I can distribute? Reason because it is ISD, IGST I paid. What I can do, I can distribute only IGST. So when the ITC is going from regular GST and to the same ISD GST and within the same state, it will go to the tax component called IGST component, not CGST, SGST component, which is a practical scenario. Generally, in our 2A, 2B, and 3B reconciliations, we'll ensure that our vendor and the taxpayer, if are in the same state, if the tax code is not appearing CGST, SGST, error. If in different states, if it is not reflecting IGST, we'll keep an error. In the given scenario, the tax code, even though the same state codes, because regular GST in the same state, ISD GST in the same state, even though same state is 36 or 37, but ITC is reflecting in IGST, which is a peculiar scenario where we come across ISD distribution under GST. I hope it is clear topic. Distribution of ITC through ISD mechanism. Yeah, right. So ITC on central input services. What you are talking about? Common services which are used. If the ITC is specific to particular recipient, take example, ISD getting the invoice from the vendor, and which is very clearly known that these services, even though delivered at ISD, that entire services are being used for a specific unit, GSTN, then distribution is going to be specifically 100% to that GSTN, and there is no question of distribution methodology or formula we need to use. This is specifically narrated in the rule number 39. Second scenario, ITC attributable to more than one recipient. Take a scenario where there are 5 distinct persons, different states or same state, but this transaction which has been landed in ISD input tax credit category, but it is pertaining to only 2 or 3 distinct persons only. In that scenario, we need to take only those 2 units turnover, and we need to distribute only to those 2 units. Now, next question is how we are going to prove to the department this ITC is pertaining to only to those 2 units. The proving that responsibility lies on the taxpayer, and how the department officer is going to convince, that is they depend upon your documentation, what you are going to maintain and present it to the officers. Third scenario, transactions which are procured for the benefit of all the GSTNs under the same band, and you need to distribute. The formula is very simple. ITCP distributed is equal to turnover of the recipient unit, recipient GSTIN, divided by turnover of all the recipients to which ITC relates into ITC. So it's simply a pro rata basis based on the turnover. Clear? Here is taken very clearly. If it's a specific unit, 100% to specific unit, only specified limited units for those units based on the turnover. If all units based on the all turnover. So now the question will come, what is turnover and how it is going to be analyzed? So turnover is defined under rule 39 by explanation. The value of turnover for all the units, whether registered or unregistered. If you see here, the value of turnover for all the units, whether registered or unregistered. I'm searching the term called unregistered. I'll explain in the due course. Engaged in the taxable as well as exempted supply, reduced by the amount of any duty or taxes levied. Turnover of recipient shall be taken off previous financial year or last quarter prior to the month distribution in case of no turnover during the previous financial year. Yeah, very simple, 3 simple steps to understand the turnover. They are telling turnover of the entire organization under a single pan, whether registered or unregistered. Second thing, engage in the taxable as well as exempted supply. The turnover of the entire organizations, you need to take not only taxable supply, you need to take into consideration exempted supply too. What need to be reduced? Reduced by any taxes or duties levied in the outward supplies. These 2 points is very crucial. And what on which turnover you need to take? Last month turnover, last quarter turnover, previous year turnover. To make it clear, eliminate any difference of opinions. The department made it very clear. You first, if you have a previous financial year turnover, you take the previous financial year turnover as a basis. If you do not have a previous year turnover, you take the last quarter prior to the month distribution in case of no turnover during the previous financial year. Is clear? Yeah. We'll go towards a few practical questions and come back to the slides to stress two crucial points. Yeah. How should turnover be considered? Whether there is a both taxable and exempted turnover. So I'm just launching a question. How should turnover be considered when there is a both taxable and exempted turnover? So turnover definition is very clear. Includes taxable versus exempted turnover. What we read. So poll is on. 100% we got a response saying that one taxable versus exempted turnover. Both taxable and exempt turnover must be aggregated for the calculation and the proportionate credit distributed under ISD. It's clear. Question number 2. Should non-GST supplies or zero-rated supplies, exports, SCJ to be included in the turnover for ISD? The poll is on and request your participation. Short answer. For ISD turnover, all outward supplies, taxable, exempted, zero-rated, non-GST are included. Only reduced them by amount of any taxes or duties. See here the answer has been non-GST supplies. I think it's been wrongly spelled here. That next question is going to be make it more clear. And we are launching the next question. The question is here. Should the turnover generated from Schedule 3 line items, is it be considered for the purpose of turnover under rule number 39? The question I'm not able to present on the screen. It is not available. You can see on the poll session. Should the turnover generated from the Schedule 3 items of CGST Act consider for the distribution of ITC? What is Schedule 3? Schedule 3 is a neither supply of goods nor supply of services. So it is been not considered as a supply at all as a goods or services such as transactions between employee-employer or petroleum transactions, court services. All those things come under Schedule 3. Sale of land, all those things. So whether the turnover of those transactions needs to be considered for the purpose of turnover defined under rule number 39. Reason because rule 39 is not given any definition for the turnover. We need to refer section 2, subsection 112 turnover definition given under CGST law. So the turnover for that purpose, is it non-Schedule 3 items eligible or not? Yeah. So the answer is out. And here the answer is no. Reason because very clearly it said that it is not a supply at all. Once its supply is not going to be take place, the definition of turnover does not comes into picture. The same is clarified by the department by circular 151 of 07/2021. So the Schedule 3 items turnover should not be considered as a turnover for the section 112 subsection of CGST law. So the turnover of the Schedule 3 item should not be taken into consideration. Best example will come into the picture, especially dealing with the real estate companies. This transaction will come into the picture. Yeah. Question number 3. An ISD starts a new branch in the current year. There is no turnover for this branch in the previous financial year. What turnover should be considered for ISD allocation to this new branch? The poll is on. Answer them is given based on the last quarter turnover. When the branch is started in the thing, first the last quarter is the basis. Reason because there is no previous year turnover. Let us the given case. This is the first quarter of the branch is started. The first quarter is not available because last quarter is not available. This is the first quarter. In this case, how is your answer is going to be changed? Can you give a response in the chat box? Because I have not framed this question. Let us take question number 3. This is the first quarter where there is no previous quarter for the new registered GSTN. And when the turnover of first quarter is not available, previous quarter, how you are going to distribute the ITC as per ISD allocation? So the answer is no. Reason because it is very clear, if there is no turnover and there is no distribution of ISD, the first quarter of any unit which is newly registered, they need to wait till the turnover is accumulated for that GSTN. Then the exclusion will be excluded for the purpose of distribution, or it will be considered as 0 for the purpose of distribution. Yeah, question number 4. 2 branches merges in the current financial year. There are 2 branches in the same state. Consider the technicality or difficulties or practical difficulties and advantage of consolidation. The 2 branches are merged into the single location, and second GST has been surrendered. While distributing ISD for the month of April 2026, the transaction taking place in the March 2026 consolidation. What turnover should be used? Whether we need to use the don't consider such branches, or you need to take a merged turnover. 100% gunshot. The merged turnover should be calculated by combining the turnover of both the branches for the previous financial year or for the last quarter. So as I mentioned, I'll go back to the previous slide to catch 2 important things. See here, there are 2 preconditions for the purpose of the value of turnover for all the units, whether registered or unregistered. I have a question here to all of you. The term we are used whether registered or unregistered. Under GST law, once we obtain a registration at a PAN based, Section 27 makes mandatory to obtain the registration for all the units, all the states where you have operations. Where is the question of unregistered concept is coming here? Anyone can give their thought process. Be happy to unmute yourself and take your inputs. Let me repeat my question. For the purpose of Rule 39, the value of turnover for all the units, whether registered or unregistered, the term used registered or unregistered. My question here, under GST law, once an location or unit registered once and it has a multiple distinct persons, irrespective of the turnover, they need to register as per Section 24 mandatorily. The registration to be obtained within 30 days from the starting of the respective location. Why the term used unregistered here?
Yes, sir. In case if my state is doing only exempt turnover, so my section 22 says if you are dealing only in exclusive turnover exempt, then you need not register from that state.
Right, sir. But to see, when ISD will come into picture, when you have been once registered at a single location, then all the locations either exempted or a taxable turnover, you need to register at a PAN based. So if I have not unregistered, then I not go for ISD registration as exempted turnover is there.
No, sir. In my case, what for example, say I have a head office in Telangana, I have
Right.
branches in Bangalore as well as in say Tamil Nadu. In Tamil Nadu, I am dealing exclusively in exempt turnover.
Right.
So my ISD provisions is mandatory for me to take a registration since I
Right.
have distinct persons.
Right.
But for the purpose of distribution of this ITC, what
Right.
is telling it, you have to consider the turnover of overall basis, whether you are registered or unregistered, so that the respective common credit will go to the respective Tamil Nadu. In my example, will go to Tamil Nadu and they have to reverse it or how, like that.
Right, sir. Now take the scenario is there in after amendment in 2019. There is amendment section 24. If a single location under a PAN got registered, whether exempted or not, even your given example, even Karnataka has 100% exempted turnover. If Telangana entity under same PAN got registered, you are mandatory to obtain the registration under GST for Karnataka also. Section 24 is very clear. If you are all the units, let us take Telangana unit, Karnataka unit, Tamil Nadu unit, all are doing exempted turnover, and even though it's crossed 20 lakhs, you can take the shelter of 22.
Okay.
But 24 says that once you got registered on a single PAN, irrespective of the taxability of the turnovers, you need to register for all the locations. Section 24 says that mandatory. And after amending 2019, it is made very clear.
Sir, sorry to add one more point in here, sir. Section
Yes, sir.
23, subsection 20, section 23, subsection 2 clearly states that it's notwithstanding. So that means if I am doing turnover exclusively exempt, then I need not take registration, sir, which is amended, I guess in 2021, if I'm not wrong, sir. Correct me if I'm wrong.
Okay, sir. See, my take is different, sir. If it is exempted for all the units, not specific units, sir. That is my understanding of the provision. But anyhow, I'll validate the thing once again. If anything is there, I'll come back to you, sir.
Sure, sir. Thank you, sir.
But as per my understanding, one unit is got registered. If the even exempted turnover is there in the other locations, you are mandated to get the registered, is my understanding. And once again, I'll recheck for you and I'll clarify it, sir.
Sure, sir. Sure. Thank you, sir.
30 days time, reason because we are talking about the first quarter and second quarter also, but here turnover you're talking about unregistered. So 30 days not coming to picture, Manohar. And admin, if there is a separate unit in a state where there is a wholly exempted supply, only then no registration required, right? Okay, right, sir. Sir, let me see if you see the turnover definition, my interpretation here, why they use unregistered. Initial days of GST from 2017 to 19, when the amendment is taking place, 24 make mandatory to register as distinct persons, mandatorily. At that time, the question of this unregistered below the turnover issue is there. That is one agenda. And this entire ISD provisions was borrowed from the service tax regime. The definition of turnover under service tax regime, registered or unregistered, reason because under service tax law, one location is sufficient to register, do service tax compliances for all over India. Even though they have operations in 5 different states, one state will take the registration and it will take care of all the 5 locations, service tax registration compliances. So there are 4 locations which are unregistered, and the law is being borrowed from the service tax regime, and the definition is being carried forward in the GST intact. The unregistered term at this point, I feel may not be relevant under GST law from compliance with the turnover. So now coming to the turnover definition is over. Now question FAQs is over, and I'm going back to the right. So this is the flowchart where I captured how the FCM transactions moving and what are the documents being used, and RCM transactions are moving, what are the documents need to be moved. If you see be clear, I try to capture very clearly here that there is a delay of ITC carry forward in RCM transactions nearly 1 month. So this delay is due to, in the given our earlier discussion, because due date for filing the GST returns 20 of the following next month, and RCM credit can be transferred to the ISDN delayed by a month, and it can be distributed only in the next month after transferring the credit from regular GST to ISD GST, where we are talking about the same thing. So this is what talking about how the documents are flowing and what is the distribution accumulation of the ITC and distribution of ITC, specific transactions, common transactions, SCA transactions, and what type of document is being issued by the ISD to the regular GSTians to avail input tax credit, and distributor of ITC, and units availment of ITC, because once GSTR 6 is filed by 13th of the month, those transactions will come and sit in GSTR 2A and 2B of regular GSTN that the transactions of input tax credit distributed by your ISD to the regular GSTNs. Based on your 2A and 2B reflections, you can avail the in 3B and utilize it. This is a single flowchart I covered at a glance to get in a documentation and transaction flow for the forward charge mechanism transactions, for RCM transactions, including SCSZ compliances. Yeah. So going to the next thing, which is crucial, key documents and their purpose. So if you see here, there are 3 sets of documents where ISD is receiving the documents. One is invoice from our vendors on FCM transactions, debit notes from the vendors on FCM transactions. Once this thing, what it has been, it is a basis for availment of input tax credit on common inputs for ISD. Once the input tax credit invoice has been issued, tax invoice issued by the vendor, due to some reasons, if it has issued a credit note by the vendor, the same will be reflected based on GSTR1 filed by the vendor. It will come and reflect in your GSTR 6A, the credit note issued by your vendor. So those things will be used as a reversal of availed ITC on common inputs, which will again reflect in your GSTR 6A. In case of RCM, invoice issued by your regular GSTN 54(1)A, this distribution of ITC by a regular GSTN to the ISD. So you are transferring your ITC credit, which is available in your regular GSTN books, you are transferring to your ISD GSTN. So first 2 transactions, invoice, debit note, and credit note. These are the transactions auto-populated based on the action taken by your vendor and filing on GSTR1. It will come and reflect in your GSTR 6A, where in case of rule number 54(1)A RCM input tax credit transferred by your distinct person to ISD, it will not get auto-populated. Reason because it is not a system generated document. It is a manual document. These transactions must ensure your ISD compliance officer need to enter the transactions manually in your GSTR 6 return for availing the ITC and distribution. These are the inward documents for ISD. Now coming to issuing documents. There are 2 types of issuing documents. One is ISD invoice to distribute the accumulated ITC to the different distinct persons. The ISD invoice will be used. And at the same time, if once ITC is distributed, for some reason that ITC what is distributed need to recall from the distinct person and redistribute to someone else, again this credit note come into picture. Or if your vendor issue a credit note for the same inward supplies, again you can issue to your distinct person's credit notes. These are the 3 sets of documents will come as inward documents and 2 sets of documents come as outward documents. These are very crucial. And what is the mandatory requirement for the documents? These are the things should be appear. How you have a tax invoice mandatory fields. These are the fields what need to be appear in the face of the documents. So name, address, GST, ISD recipient, date of issue, amount of ITC distributed. These are the common. So now interesting topic. Now when you see if you are filing GSTR1, there is a table at the bottom. What is the serial number of documents you are issuing? How many sequence of numbers you are using? What is the starting number, ending number, and how many are cancelled? How many are effectively used? This is the table you are filling on the GSTR1 for the documents used by the regular GSTN. Such compliance is required for the ISD related tax transactions and documents. If you see rule number 54(1)A invoice, regular GSTN, serial number requirement. See the document defined under rule 54, the compliance with the rule number 46 is must. We need to have a control of those numbers also. Even though it's not reporting online and there is no facility as on date to report the sequence numbers in GSTR1, but it is obligated to comply with the rule number 46 by that regular GSTN when he is issuing the ITC transfer document to the ISD. If you see here, yes, rule number 46 compliance requirement, unique and consecutive number should be used and not reported in GSTR 1.3b is not reporting. and maintaining the books of accounts of regular GSTNs. Second, ISD tax invoice and ISD. Yes, ISD tax invoice also need to be reported complied with the rule number 46. Reason because these transactions he is reporting GSTR 6 and those transactions are getting reflected in your GSTR 2A and 2B of your regular GSTN for availing the ITC. So your transactions, even though you are not having a table to report the sequence serial numbers and cancel and active, but you are supposed to maintain the sequence of the numbers. So these are going to be reported in GSTR 6 and ISD GST maintenance required to maintain the books. ISD credit notes and debit notes. Yes, separate serial number we need to maintain as per rule 43 and GSTR 6 is warranted to report. ISD required to maintain this documentation control. We are going to a scenario where credit notes issued by ISD and how it is going to address. So I have taken three scenarios and for simple. First scenario, credit note distributed in a month and credit note issued in the same month. So distribution of the input tax credit and credit note issued in the same month. So in the same month, it is the transaction distribution is there and the credit note is there. So you can adjust the same thing and adjust the credit note against the invoice of the same month in GSTR 6, distribute only the net credit. So no problem because I am distributing 1,000 rupees credit and I got a credit note of 600 rupees. Net amount is going to be 400 rupees. I am going to distribute based on the turnover as defined in the rule number 39. Second scenario, credit distributed in a month and credit note issued in the next month. Take example, in the month of May 2025, I distributed 1,000 rupees. But in the month of June 2025, I got a credit note of 600 rupees. How we need to address? Report the credit note in GSTR 6 of the next month and offset against the other positive credits. So in that month, if I have some other input tax credits where I need to distribute an ISD, I can adjust those things. I can net amount I can transfer to the vendor. So net amount I can transfer to the distinct persons. So here also is clear. So even though I'm getting a credit note of 600 rupees, this month I have a credit of 2,000 rupees. I'll adjust 600 rupees credit note and 1,400 only I'll distribute. The third scenario, credit note distributed in a month and credit distributed in a month and credit note issued in the next month. No common inward supplies present. So this is a scenario where I got a credit note worth of 600 rupees, but I do not have any inward supplies as an ISD to distribute the input tax credit to the distinct persons. So my input tax distribution for this month, if excluding the credit note, is 0. So the credit note is minus 600. How we need to distribute? It is very clearly said that one that cannot show standalone negative in the GSTR 6. ITC in the less than the amount to be adjusted. Hence, ITC amount should be added to the outward tax liability of a regular GSTNs. This is where the tracking and control system make you a lot of painful and administrative work on the compliances officer. So return relevant to for ISD. So as we discussed, one of the connecting return is GSTR 6. This return need to go every month, 13th, and nil return must be filed, no ITC available or distributed. So even though ITC is not available, you are not planning to distribute, you need to file the nil return and the due date is must be filed by 13th of the next month. Suresh, what will happen if I not file? What will happen if I not distribute? Those things we'll discuss in the meanwhile. GSR 6A, as I said, this is a only read-only report, and these transactions in this report will be auto-populated based on the GSTR 1 filed by your vendors. It may be tax invoice, it may be credit notes, it may be debit notes. So this is no requirement of any filings. It is in a read-only access report. System GSTN portals facilitate you to cross-check your books with your vendor compliances. If any non-compliance is there, you can contact your vendor to ensure the compliance is taking place. Reason because GST credit is equivalent to the cash. Let us go a few questions with reference to documentation and returns. Yeah. Does ISD need to file an annual return? Yeah. Poll is on. Proper gunshot answer. No. Unlike regular GST registration, annual return is not required to be filed by the ISD GSTN. Second question. What is the late fee in case delay in filing of GST 6 returns? So we are talking about the GST return will be filed by 13th of the following month. If I don't file on 13th, what is the penalty for non-filing? Poll is on. Right. The answer is ISD shall be liable to pay rupees 50 for a late fees similar to normal returns. Yeah. Next question. So this is where we are most of the ISD registered persons, how to maintain set books of accounts and how we need to be addressed. Just we try to capture the best what is possible. And these scenarios, what we're explaining the examples of entries and the transactions. So we captured into two scenarios. When common books of accounts, all the vendor transactions are recorded under the regular GSTN, while the ISD registration is used solely to distribute the ITC. Only ISD, there will be only transactions, availment of input tax credit, distribution of input tax credit, ultimately ITC availment and distribution ledgers in the books of accounts, no other transactions, vendor transactions and the payment transactions and distribution of taxable value to the distinct persons, all those things maintained in the books of the regular GSTN of the respective state where ISD has been obtained. Scenario 2, where ISD registration independently maintain the records, invoices and input credits along with the taxable value with the regular GSTN issued exclusively for the vendor payments. Only regular GSTN will take care of the payments for the transactions which are routed through ISD, but all the transactions will be recorded in the ISD books, and ISD will distribute not only ITC through GSTR6, it will be distributed taxable value also to the respective units by a general debiting documents or JVs. These are the two scenarios what we covered, and we try to capture a sample entries in the books of accounts. Just let me share the, for understanding purpose, what are the scenarios and how entries are being captured. So for sake of more clarity and understanding, we splitted that first transactions into FCM transactions and second one is RCM transactions. FCM transactions, talking about scenario 1, where books of accounts and the records are maintained under regular GSTN, only ITC related transactions, distribution and availment will maintain the ISD books. Let me explain one scenario. It will be very clear for you people instead of going to multiple scenarios. So once vendor issued the transaction on FCM invoice. So because vendor issuing the transaction to ISD GSTN, not to regular GSTN. In spite of that, regular GSTN will account the expenditure in the books of accounts, common input services taxable value versus input GST, receivable on behalf of the ISD, and to vendor payable. So this is the accounting the expenditure and this payment to the vendor and ITC transfer and availment. So the ITC which is available already landed in the GSTR 6A of the ISD. So in their books, they'll transfer the ITC from regular ITC ledger account to ISD ledger, 1800 rupees. What is the taxable value? And the same thing will be recognized in ISD books as a availment. For distribution, so let us presume in the given case, regular GST number which has been reflected in C column, say unit 1, and there is a unit 2, and the turnover in the given example 50-50. So the same ratio, 50% is been allocated to the unit 1, 50% allocated to the unit 2, and ITC be transferred. So ITC available for by recipient unit. So because unit 1 has only 50% ITC and it is availed the ITC after 50% based on the distributed done by the GSTR 6 of the ISD. And now expenses also unit 1 transfer to the unit 2, the ratio of 50%. In the given example, we have taken a 50% is the blend rate. So similar fashion, if you see here, scenario 2, where ISD maintain the books of accounts in its own, only GSTN of regular is accounting, payment entry, and availment of ITC, which is distributed by ISD. Just I'm walking through the RCM transactions. So RCM transactions, what is unique here? In that case, for FCM, the transactions are routing through ISD. In case of RCM, transactions are routing through regular GSTN only. So common input services, taxable value, vendor payment is common. And because here there is no tax component, so we are taking the gross value of transactions. RCM liability is a recognition, is recognized RCM liability, and RCM liability discharge, and the transfer of RCM liability, RCM input tax credit to ISD. So this is the transfer of by issuing the ITC transfer document to the ISD, and distribution of ITC and the distribution of taxable value. So in the two scenarios where books of accounts maintained by regular GSTN, ISD is restricting to only ITC part, or where ISD is maintaining full set of books of accounts and the GST is maintaining the GSTN maintaining the only input tax credit and payment transactions. So this going to be make a very complicated and reconciliation between the ISD books and regular GSTNs. Unless you have your records very clear, it will be difficult for us to substantiate and reconcile with your books of accounts. Yeah, I'm going back to my presentation. So scenario 2 is covered and detailed entries step by step is being given, and this has been tested. Still we are working on these things. Once the year is closed and after ask for the thing, those things will be more proven case. Yeah. So now we are going to one of the practical scenario, especially in the ISD compliance or in compliance has started, and what will happen if rules 37 applicable to an ISD, and what is the impact of non-compliances. This I am going to give as a question and answer, and what is going to be happened. Actually, rule 37 is applicable to an ISD. We got 75 plus answer, substantial interest, more than that, as a positive yes answer, and around 25 no answer. So let us evaluate the step-by-step process. Vendor raises an invoice to ISD GSTN. This is a regular activity first step. And ISD distributes the ITC through GSTR6 irrespective of the vendor payment status. So because and the date of distribution, payment to the vendor is not a mandatory requirement. Reason because under rule 37, we have a time frame of 180 days from the date of transaction. They can distribute irrespective of the payment at the time of distribution. Recipient unit avails ITC in their GSTR3B based on the ISD distributed. So the whatever the ISD distributed ITC to the distinct persons, ISD regular GST taken the ITC and used that ITC for payment of the tax liability in GSTR3B. Regular GSTN is responsible for making the payment to the vendor who has been accounted this transaction, and they are responsible to make the payment to the vendor and not pay the transaction. Now, if vendor payment is not made within 180 days from the date of invoice, recipient units must reverse the ITC along with interest in GSTR3B under table 4B2, which is temporary reversal, not a permanent reversal. So the responsibility of reversal and payment lies on the regular GSTN, not the ISD GSTN. Reason because ISD registration logins does not have a facility to make the payment to the taxes to the government. So the person who accounted the transaction in the books of accounts, they are supposed to reverse the transaction and make the payment of ITC equivalent amount along with the interest. Once the vendor payment is made, the recipient unit can re-avail the ITC in the period of payment. So here compliance with the rule number 37 is lies on the GSTN whose transaction has been routed, And even though ISD has been distributing the ITC, but the burden of compliances will come into picture. Here, one more practical scenario, when you make an excess payment also through DRC 03 or whatever the reporting, next question from the department will ask why this payment is happened, what is the supporting transactions. So this will make a lot of record reconciliation and keeping convince the department, which will require a lot of efforts to match the records and ensure that reconciliation between the ISD transactions and the regular GSTNs to substantiate our actions for the compliances of the law. So let us see some questions with reference to this. When should ISD distribute ITC? Please launch it, please. Is a 2:1 ratio. We got an answer that 67% saying that one we need to avail in the distribute in the same month, and where 33% we got an answer that in the subsequent month. It is very clear ITC distribution need to be taken place in the same month. But here I have a practical scenario. When I don't distribute as a taxpayer, ITC which is accumulated in my GSTR 6A and 6, my working capital is getting harmed and I am postponing my availment of input tax credit for the future period. Why department is making mandatory to transfer in the same month is a question mark. Let us presume it will not transfer in the same month. What is going to be the big challenge? The reconciliation between ITC is transferred by GSTR 6 and 6A and 3B returns is going to be a very cumbersome transactions. Apart from that, department is making it mandatory, but even for us to make a books of accounts, to make a matching concept, better to do on month. What type of ITC must be distributed? So the poll is on. So both ineligible and eligible ITC need to be distributed. As we discussed, the objective of ineligible ITC to distribute, the primary objective of GST law, the consumption-based distribution of tax, that it need to reach the state where the tax is being consumed. So to ensure that ineligible ITC also reach to the place where it is being consumed and reported in the respect to GST 3B of the regular GSTN. Yeah. What if ITC reversal via credit note is higher than the distributed ITC? So this scenario already we discussed. If your credit note is a higher value and where your accumulated ITC for this month, which is eligible for distribution, is lesser than the credit note. So we have 4 options. One is ITC must be reversed by the ISD. Excess should be added to the ISD, outward supply liability. Excess should be added to the branch, output tax liability. ITC must be reversed by the branch. Carries out reversal under common credit. So once ITC is eligible, the reversal is required. Who need to take care of? Whether ISD need to take care of reversal of ITC or respect to GST need to take care of reversal. Because distribution is must for eligible and ineligible. And who need to take care of the responsibility of the reversal? Whether regular GSTN after distribution of ISD or at ISD level, we can reversal. The reversal need to be taken place at regular GSTN, as we discussed in the GST 3B, when they are reporting in 4B 1 and 2, that benefit will go to the respective states. They'll ensure the compliance of the same thing. So reversal under Rule 38, Rule 42, 43, and Section 17(5) all will come under regular GST and not at the ISD level. ISD can only accumulate, distribute, whether eligible, ineligible, proportionate, all those things need to be taken care by the regular GST. Can ITC be distributed to a unit which has 100% exempt turnover? The answer is yes. Reason because, as we discussed, the reversal and distribution of the responsibility of ISD, irrespective of the exempted or not, based on the turnovers at the respective units. whether it is eligible, ineligible, reversal, all will be taken at a distinct persons. What if recipient unit is an SEZ unit? If the recipient is in a unit and SEZ unit, is it required to distribute the ITC to those units? There is no exception to ISD for distribution, whether SEZ unit or not. If the transaction goes to directly SEZ based on the LUT, they may get inward supplies without a tax. But if the transaction is routed through ISD, that tax accumulated in ISD need to be distributed even to SEZ unit. So now we are covered ISD related availment, utilization, distribution, return filings, and other compliances with reference to Rule 37, all those things. And now we'll discuss about the penalties for non-compliances. Disavailance of ITC. So if take example, without ISD registration, if branches cannot receive the ITC, and that ITC is availed by the regular GSTN, which is been benefit for all the locations, those ITCs can be disallowed by the law, and that is going to be your sunk cost charged to P&L account. This is have a higher impact on the eligibility of ITC and may be required to reversal along with interest if it's wrongly availed. Interest on unpaid taxes. Once you do not pay the availed ITC, which is wrongly or ineligible ITC by a regular GSTN, which is supposed to routed through ISDN, it is routed through directly for regular GSTN. You need to pay along with interest the entire ITC amount. Prosecution is severe cases, but this is very peculiar scenario. But if someone used intentionally to malfide intentions, those things will come into picture. Generally, ISD does not have a fake transaction. Fake transactions are routed through ISD, then situation will come into picture. But a very peculiar scenario where we are talking about prosecutions and severe cases. Right. So now we are moving a last step before preparedness for ISD compliances. What to be get ready to make the ISD compliances on track? So first you need to identify the common expenses which were credit distribution through ISD is necessary. So unless you identify your first list of inward supplies and inward services which are required to distribute through ISD and which are being used for a common benefit. Step 2, determine the locations required ISD registration. So you can take one registration and you can route all those transactions through that registration and distribute to the all distinct persons. But ensure here when RCM transactions is available, the locations which have RCM transactions to distribute the ITC, they need to must and should, they need to avail the, they need to obtain the GST registration. Identify the vendors. So now you identify the expenditure. So those expenses you need to identify from which vendors those supplies are being obtained, procured from our company. Once obtained, you need to obtain a single ISD registration for identifying. Obtain a single ISD registration if only forward charge mechanism invoices are to be distributed. Multiple ISD registrations if reverse charge invoices are also to be distributed. If you take example, what in the given above case, if you are having RCM transactions on the multiple GSTNs, it may be impact your ISD compliances and you need to obtain all those regular GSTNs along with the ISD to distribute the ITC on RCM. So you need to be very careful while availing the ITC on RCM, especially which are common used. Inform the vendors. You need to inform the vendors in advance on which GSTN they need to issue the tax invoice, and you need to cross check while accounting the transaction and making the payments to the vendors. And update about the expenses and the new ISD registrations. Reason because unless you update about your GST numbers and expenses on periodically, you can't inform to the vendors and you can't get the proper tax invoice. create necessary ISD account in the books of accounts. So you need to create a chart of accounts in such a way which are the transactions routing through ISD, taxable value, ITC, and its transfer, its distribution, availment, and utilization. So these all chart of accounts relevantly you need to create and maintain uniformity to reconcile and avoid future reconciliation process. Perform month-end allocation of ITC and related expenses distribution. So we need to end of the month, we need to see what has been allocated of ITC and its related expenses distribution need to be taken care. With this, we are preparedness for ISD's compliances and last reconciliation with the GST or 6A, books of accounts, and documents such as tax invoice, credit notes, what we are talking about, tax and inward supply documents and outward supply documents. You need to do a cross reconciliation on all those transactions. Yeah. We are reaching to a last topic, which is a bottlenecks and compliance burden. This is my personal opinion and maybe a difference of opinion of the different professionals and a different thought process. But this is my entire personal opinion and not substantiated by any provisions or laws. Okay. See, I feel the additional compliance burden on the taxpayer. If you see here, the accounting part, GST 6A reconciliation with the GST 6 and 3B regular GSTNs, all those things is need to be taken care by the taxpayer. The main object of ISD under service tax law, availment of ITC duplicate by the different registered persons. So under GST law, there is a concept called invoice to invoice matching concept by reflecting in 2A and 2B. And based on that only they are availing ITC. Once the invoice has been reflected in one location, 2A, 2B, that will not come and reflect in the other GSTN. So the availment of duplication of ITC based on the single invoice, the probability is very less and which is easily traceable by the officer. Reason because 3B versus 2B, they are sending the reconciliation statement and issuing the notices. So the primary objective, loss of revenue to the government, which is the primary objective, addressed under GST law, the concept which is borrowed from the service tax regime, still I feel that one maybe not stand good at this point, only restricting to the input services. The allocation of ITC. If you remember, when I'm talking about the distribution of ITC based on the turnover of the respective units, I told it's unfair or illogical. The reason because unfair I told, because there are two methods only. If 100% pertain to the location, distribute it. If any other proportionate, the same need to be distributed based on the turnover of the respective units or the all the units, whether exempted or taxable turnover. I'll give a practical scenario. Take example, they are procuring a HR application, HMRS or a MS Office license, and the license is being distributed based on the turnover. A turnover for, let us take a taxpayer as a 4 locations, Telangana, Andhra Pradesh, Tamil Nadu, Karnataka. Karnataka has only 2 employees, but turnover is 10 lakhs. Tamil Nadu has 20 employees, but turnover is 5 lakhs. And AP and Telangana turnover is 10 lakhs, and employees 5. Based on the turnover, the distribution is taking place, even though employee count is really Telangana, Andhra Pradesh, and Tamil Nadu is more, but Karnataka is getting a more ITC, even though employees are less. So the allocation of ITC based on the turnover single parameter, I feel that there are a lot of scenarios where unfair allocation of ITC. But you may follow uniformity, but unfair allocation of ITC, only one parameter called turnover. Different methodology need to be adopted for capital goods and inputs. So this ISD is going to be addressed a scenario only input services which are used commonly. Let us take a scenario where inputs are used commonly, capital goods are used commonly. On what basis need to be distributed, how to be accounted, all those things again need to be come under a cross-charge mechanism or some other methodology which is going to be adopted by the taxpayer. So it is a partial solution for this type of transactions. It's not a complete solution considering the business of the taxpayers. Compliance of section rule 37, section 16, reading 64, 16.4, all those 6 non-compliances, the transactions which are reflected in ISD transactions, that non-compliance again need to be taken care by the regular GSTians. So transactions only reflecting somewhere else and books of account somewhere else. And these two matching and reconciliation is going to be one more big task. Reason because both are independently operated and we need to do a matching concept and reconciliation, which is the additional burden on the taxpayer. Of accounts and reconciliation between various documents and vendor ledger. As explained the accounting and bookkeeping, if you see for a single transaction on FCM, we need to pass nearly 6 entries, and for RCM, we need to pass 7 entries. So for a single transaction, the number of level of accounting and compliances record keeping, how it is going to impact. So this is going to be additional burden on the compliance team and the bookkeeping team members. Different vouchers and serial sequence numbers. At present, if you ask me, out of 100 taxpayers, there are taxpayers still they are not able to maintain the tax invoice in the sequence manner and a serial number. Still there are cases where they are adding a different sequences in the different months also. Still the things are not streamlined in the regular things only. This sequence what you are referring is which are not maintained by system, maintained through manually and need to be reconciled. This will give a lot of scope to the officers to point out the shortfalls and levy general penalty, which is ranging between 25,000 rupees CGST, 25,000 rupees SGST, which is the additional burden or a more opportunity for officer to find a gaps in the compliances. RCM transactions may require very distinct person to obtain the ISD registration. So it may create additional burden because the transaction routing through ISD, regular GST need to transfer to ISD and ISD need to distribute. These all things make additional burden on the taxpayer apart from the blocking the cash paid under RCM for a 1 month working capital blockage. With this, I'm through with my presentation and happy to take any questions on this.
First question is, can we take RCM credits in the same month?
Very clearly it's mentioned RCM credit cannot be taken the same month. Reason because GSTR 6 need to be filed by 13th of the following month, where a case of RCM liability being discharged in cash by 20 of the following month. So you are filing your ISD return 7 days before the GSTR 3 be filed. For availing ITC paid under RCM is a payment is one of the first criteria. So payment is getting on 20th of the following month. You can avail that ITC on or after 20th of the next month. So there will be a minimum 1 month delay in the process of availment of ITC under RCM.
Thank you, sir. The next question is, what if we have filed nil return in April month? Can we claim ITC in the May month?
See, there is no obligation that you can't avail the input tax credit, which has been transactions reflected in 6A in the month of April and availing in the month of May. Reason because your GSTR 6 table 3 facilitate to add the transactions missed out or not reported by the taxpayer or your vendor. So you can still avail the things, but only you need to think the reconciliation between your GSTR 6A, books of accounts, and GSTR 6. That is one additional button, and you are blocking your input tax credit for 1 month. These are the two things which has been painful for the taxpayer. The officer may come and ask, you are supposed to distribute in the same month, you are not distributed, and the officer was particular about the legal terms in as it is. And he asked, must you distribute? He may say that one, I can go section 125 and levy general penalty. So this is the depend upon the office interpretation and argument, but under the law, there is a possibility for you to avail the input tax credit, which is not distributed earlier. You can take this month and distribute it.
Thank you for answering that, sir. We have another question. How the distinct person can add the excess credit to their liability? How can it be substantiated?
Can you please repeat the question?
How the distinct person can add the excess credit to their liability? How it can be substantiated?
See, this is, if you see the input tax rate now talking about, let us take a scenario of Rule 37 compliances, where payment not made within 180 days. So there is a separate table under GSTR 3B for the regular GSTs to report the transactions. So there is no matching concept for which ITC you availed and which you are paying now. There is no matching concept. You need to disclose on your own and discharge the tax liability. But your supporting documents will be the ITC availed by ISD on the inward supplies and what is not paid by the regular GSTN. This is the additional documents you need to keep and make ready available to substantiate your transaction. Under the law, there is no defined documents prescribed for this process.
Thank you for answering that, sir. We have one last question. If I have multiple registration in the same state, do I need to take GST registration?
ISD registration.
Yes, sir. Do I need to take multiple GST ISD registrations?
Multiple ISD registrations may not warrant, but if you want to make your compliances at your convenience, you can take. There is no bar on you to obtain the multiple GSTNs in the same state, multiple ISDs in the same state. But you need to take care of those things very vigilantly. Reason because once you're taking reconciliation between the number of GSTNs is going to be a burden on the taxpayer.
Sir, we have two more questions in the chat box.
Please.
Is there a separate treatment between services which are directly attributable and services which are indirectly attributable to multiple GSTINs for ISC? Example for services that are directly attributable, ERP subscription services, and services which are indirectly attributable, security, housekeeping, and rent services for the corporate team.
As we discussed in the bottleneck points and unfair allocation, if you see ERP, once it has been implemented, ERP implemented all the locations, all the GSTNs without disparity. Once ERP has been used by all the locations, then the basis for the distribution is only turnover. The unfair allocation of ITC, what we discussed, because once any input services which have been commonly used, the basis for the distribution is only turnover. You can't take any other basis because law defined this is the basis and this is the way you need to allocate. So you can't make a different parameters for different type of inward supplies to distribute the ITC. That is what we are talking about, the unfair allocation of ITC under the rule number 39. I hope I answered the question. If something is missing, please, you can unmute yourself and get it clarified.
Thank you, sir. We have another case here. So we have a case in hand of a partnership firm, SSE, which has 4 independent units in the same state. Each unit is run independently except for audit service, which is consumed by all units. No other services are common and therefore there is no case of distribution. We advise them to obtain ISD registration, but SSE chose not to avail as it will raise additional compliance and the auditor will raise separate invoice on each branch. Will it be accepted by the department?
See, if you see the section 24, read with section 261, ISD compliance is mandatory when you have a distinct persons. So obtaining registration is mandatory. In the given case, you are foregoing the ITC credit versus you are comparing with the compliances, and you have felt that one foregoing the ITC is better than the taking care of compliances burden. See, as a law, if you say it's saying the mandatory, and even though you are not availing ITC, because there is no reversal of ITC and the interest on the same thing, but the department may come and ask, boss, this is a mandatory provision, it is applicable for you, you are supposed to register and file the nil return, irrespective of your interest to avail the ITC or not. That is my interpretation. Reason because the officer will read the text into the black and white, and he will not really go into the concept and understand the practicality. So if you say that one, it is a must, you have been not compliant, and there is a probability to enable section 122 for non-obtaining the registration at 10,000 rupees penalty, and non-compliance of the GST provisions under 125, he may levy general penalty 25,000 rupees as CGST, 25,000 rupees as SGST. So we need to test the law and wait for the practical cases.
Thank you, sir. The last question we have is, in case of certain expenditure whose place of supply is not aligned with ISD, GST, IN, we will not be able to get input credit due to the POS issue. How do we handle these cases? For example, if a company is advertising about their brand on a hoarding in Delhi airport, then the place of supply will be Delhi, but ISD registration is in Telangana. Then this will create an ineligible credit for Telangana ISD.
See, where we are talking about the place of supply is important for the availment of ITC. In the especially the movable properties or healthcare services or personalized services, the place of supply definition comes into picture. The place where the service is rendered by the service provider is going to be the relevance, or the place where services received by the recipient. So in the given case, you are talking about Delhi is the place of supply, and ISD is available in Telangana. To avail the ITC in Delhi, you are supposed to take a ISD registration in Delhi only. You can't, if you ask your vendor to issue the invoice on the Telangana, if he cannot issue the invoice, and it's not eligible for input tax credit.
That is all the questions, sir. We are done with the questions. So I'll be concluding with the vote of thanks. Thank you so much, sir, for your insightful session on ISD in GST. Your practical explanations have given us a great clarity on the subject that is often complex. I also thank all the participants for joining and making this session meaningful. We'll look forward to your continued support and to seeing you all in our upcoming programs. Thank you once again and have a wonderful evening. Thank you, sir.
Thanks all. Thanks for the opportunity. HCAS team. Thanks all for the participants.